Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good afternoon. Ira Epstein of Linn & Associates with your metals market update for this Tuesday, the 17th of October, 2017, about 1:05 p.m. Central Daylight Time. Well, as you can see, the gold is down. In fact, it's going to finish the day off around 1286.20, which is about $1 lower than the silver was right in this 1700 zone as well. You're getting a bit of a respite in the copper prices, which have roared, and the platinum has given up some of the gains. Now, what we have to keep in mind is that you've got the Communist Party's big meeting that begins tomorrow. It happens once every 5 years, twice a decade. And from that, we get an idea of where they want to head over the next 5-year period. Obviously, it's a show of strength. The president consolidates his powers. The economic progress is discussed, so on and so forth. We're looking at a dollar that's been a bit stronger than everything. The game is up in the air as to who's going to be the next Fed chairperson. The economic data that's been coming out doesn't look to me like it's going to be able to stop the Fed or give the Fed reason to not raise interest rates come December at the next Fed meeting. In the British pound, you were down today as Mark Carney threw some cold water on ideas that in November the Bank of England will just automatically be changing its monetary policy. So that all plays some degree of what's going on in the metals, and certainly a strong dollar weighs on them. Now, as we take a look at the gold chart, the one evident thing is that the market took out, and let's go to last week's high, 1301.70. You got up this week to 1303.80, and now the question is, are you going to have a reversal week to the downside or not? I can't answer that. Support shows up around 1278.30 on the weekly chart. When we go to an area chart of closes, the market has changed its thrust. Yesterday, we had still had a continuation of the upthrust. Now the market's going back the other way, if you will. And you see that pretty good as to the lower close yesterday and follow through to the downside. When you put the swing line on, and you can't see it right here unless you're trained your eyes like I have to know where it's at, but it's going to be right here at 1286.80, and we took that out. So what that does, in effect, is it takes the market out of the uptrend thrust that it had, and it gives it no trend. It's got a higher high and a lower low. That is the definition of no trend. I then run on the market moving averages to see about where we can look for support zones, because my theory is that when a market's over the 18-day average of closes, you've got an upthrust, and often when it's over it, it likes to return to it to figure out what to do next. It closed under it today. The very next support, and there's obviously other ones that traders can use, but the way I view the chart, the very next support is the 100-day average of closes at 1281.10, and you can see that right through here. What about Bollinger Bands, which offer theoretical resistance and support points? You didn't quite get up to the upper band. You missed it. You missed it by about $3.50. The market is pulling back. If it crashes through the 100-day average, the green line here, it might go to the lower band of 1266.80. Be interesting to see. Is the market trending at this point? No. Is there bias? Yes, to the downside. What about the condition of the momentum? Well, both numbers are now under 70. The market is no longer overbought. So what the market was able to do with this break now is get out of an overbought condition. The bigger picture, as I see it so far, is trying to consolidate. It's fighting the idea of the possibility of a more hawkish Fed chairman. We keep hearing so many names coming out in the surveys, especially the ones by Reuters recently, which I pay attention to all the time. And the question is, after he meets Fed Chair Yellen, which I think is Thursday of this week, does she get the nod? I mean, it's always moving. And the question is it going to be a more hawkish Janet Yellen or a more, let me say that right, a more dovish Janet Yellen or a more hawkish one of the choices. The name's Powell's the newest name in the list. As you go to the gold ETF, like the futures, it did not make it to the resistance point, the upper Bollinger Band, and it is retraced right back to the 18-day average again, looking to see what to do next. It, too, is no longer in overbought status. Now, let me back up a day. See how you have the number over 70 in 76.95? That's overbought, any number over 70 in my definition. Now, when the market has both numbers under it, momentum may turn down, but you're no longer in what? You're no longer overbought. I don't know that momentum's going to turn down. The red line is not under the blue at this point. In the GDX, the miners, this absolutely hit the top Bollinger Band. It got under the 18-day average of closes. I want you to look at the price, 23.40, and look at the 18-day average, 23.44. That's where the market seems to be fighting. Now, let's assume it drops further. The next support's 23.01, the 100-day average, and then the lower Bollinger Band. What I see, though, is a market that is spinning in sideways action. I wish I had this a little higher. You could see. When you get sideways action, that's what trends are made from. That doesn't mean it's going to go up. It just means it's going to have a trend that builds from there, and it's like a spring inside of a pipe. The more it winds, the longer the sideways action goes. Ultimately, the bigger the trend becomes, or the breakout point. What has happened here is GDX has led the way to the upside and led the way to the downside, and it's now trying to neutralize itself. The gold-silver ratio had a nice run from the 77 level down to 74.93. It's now in an upthrust, so it's going the other way, where silver is losing the gold on a relative basis. It was at 74.93 ounces. Right now you need 75.53 ounces of silver to get 1 ounce of gold. When I look at silver, I had put here the 200-day average in the gray area because I thought it was so important. I rarely show that, as most of you know that watch this. And what I was saying is, between that and the first challenge above it in quite a while, the question is, does the market have the ability to start building on that, or is it going to get thrown back again? So far, it's thrown back. The positive is that if you look at the other key averages, the 100-day at 1698.40 and 1695.20, the 18-day average, we got to 98.50. We basically held the first test. The problem is you are still in overbought territory, and this market can easily work against those numbers or lower. Are we trending? No. Is the chart throwing out any type of signals? No. Because it's over the 18-day average, you have upside bias. Because the swing line is no longer trending, you have no trend. And momentum is pointing down. Everything's fighting each other. In the copper market, this should be of no surprise. The market had spent, let's count this, 1, 2, 3 days in a row, not this day, 3 days in a row underneath the Bollinger Band. Actually, that day's also over it. Let's count this together. This day at 306.05 is over the upper Bollinger Band. This day's over the band, that's 2. This day's over the band, that's 3. Yesterday we settled literally right over the band, that's 4. The odds of having 5 days in a row over a Bollinger Band, 1% if you go by my rule of thumb, which is that 5% of the time the market will close outside of a Bollinger Band. My rule of thumb, it's not based on anything but observations, and you can go back and do this yourself, is that if you apply 1 percentage point to each one of those 5 points and you take it down, the market had a 1% chance of staying over the band today. Is that important? Well, to me it is, in the sense that it's telling you those that bought up there, they've got temporarily, they're under the gun. That's all that it means. You have an embedded reading which is bullish. Take the red line under 80 and I'll call for much more of a correction. Barring that, I think this pullback is what the pros are waiting on, and they might buy into it basis what the Communist Party's whole parade, if you will, starting tomorrow until the 24th, says about what they want to do within China, who is the world's largest consumer right now. If we go to the platinum market, you can see how the market went up. hit the upper Bollinger Band, challenged the 100-day average. Now it's pulled back to the 18-day average for support. It is still in overbought territory. So it's a pullback, but not a change of trend in this market. In the Palladium, same type of thing. You're overbought. You got up to the Bollinger Band. You spent a number of days, 1, 2, 3 days over it, finally got back under it yesterday. And you're not breaking very hard from there, but you are overbought. And until the market either embeds or works that off, it's a very dangerous situation for the bull. Yes, the trend is up, the bias is up, but the question is how far of a break. And you'd have to agree, the market has had a heck of a run. Again, I'm going to repeat something. This market's getting its bid because palladium is used in what? Gasoline engines as converters. And with diesel having had the big problems with the, if you will, the cheating on the software that told you the emissions and so on, well, auto manufacturers are getting further and further away from diesel, so the demand is here. In the dollar index, it's about interest rates right now. It's about perception. Is the U.S. going to be more hawkish or not? And the market is bouncing around this 18-day average and has been doing it for the better part now, going into tomorrow to be 5 days. Momentum is no longer pointing down, but it's not turned up either. The market has pretty good resistance from 93.90, in fact, right there at 93.93, the combination of the 18-day average and the 100. In the stock market, you've gotten down, if you get my newsletter, about where I thought the Russell was going to find support. So it's fallen, let's call it from, what, 1518 or so down to 1497. I think that's your support area. And if this is the break in the stock market, you gold traders got to be concerned. I mean, it's just like a vacuum. It's sucking money out of the market. Let's talk about a great publication, one of my favorites, called Modern Trader. Now, Modern Trader is a magazine. It comes out once a month, and in the November issue, the very famous, as you know, Jim Grant talks about interest rate ideas, where he thinks things are going. Mark Cuban is right there. You get to the stories of it, and it's just fabulous reading. But it's meant for you, be it you a futures trader, an options trader, a derivative, an ETF trader, whatever it is. Because if you look at the news stories right here, you can see they cover all those different types of markets. It's not about any one thing. Then when you get to the technical stories, which is what I really love the meat of, it gives you all these ideas, systematic versus discretionary trading. You can go to Dodging the Dow, Debunking Myths, the log parabolic, I said that wrong, options model. What does it mean? So it gives you something for all you people that really like to look, if you will, at numbers, at chart patterns, where does the market carry forward? And of course, then you get the former trader keeps returning, the Burning Man, stories like that. Here's what a typical story looks like. Great graphics, teaches you how to work with this. You can see the trading confluence of chart patterns, but this isn't enough because you put out a magazine once a month. What do you do on a daily basis? Well, you get market focus. Market focus comes with stories, graphs, each and every day. These deal more or less with what's going on today that you can deal with tomorrow. How do you get a free subscription? It's a $79 value. You can call us. You can go to our website. That's going to be important. You can look up here. If you're watching me on YouTube, you're going to see the icon. Or underneath us on a number of websites says, click here for Ira's free offerings. Do so, and away we go. I'm Ira Epstein. You have a great day. Might as well take advantage of this. Put some good information in your hands. Have a good day.